Hi everyone, Tai Zhi here, CIO of Auto Wealth. In this video, I will share with you what is dollar cost averaging, how it works, and the principles to apply dollar cost averaging the right, intelligent way. Dollar cost averaging is an investment technique where the investor splits up and invests his intended investment capital evenly across a predetermined frequency and time period, which can be weekly, monthly, or even quarterly over a total of X weeks, months, or quarters, depending on the preference. A real-life example of dollar cost averaging would be $12,000 that I want to invest. And I choose not to invest all $12,000 at one go, but instead to invest $2,000 across 6 months. You might be wondering, why would an investor divide his investments? Isn't it the same as investing all at once, since you will end up investing the same amount of $12,000? Well, DCA allows us to avoid the risk of investing a substantial lump sum in a poor market timing, i.e. to say, the risk of investing today and experiencing an immediate market correction thereafter. Let me illustrate how DCA can be better than investing lump sum. We have Tom, who invests $12,000 lump sum in January 2020. The immediate 1 month after Tom invested his $12,000, the COVID pandemic took the global stock markets by surprise, and Tom's portfolio suffered a temporary but significant drawdown. In Tom's case, investing as early as possible backfired, as Tom ran the risk of investing at a poor market timing. Although, I will add that as long as Tom stays invested, by May 2021, Tom's portfolio would have appreciated by over $3,000 as global stock markets rebound swiftly from the COVID sell-off. Indeed, global stock markets always appreciate over the medium to long term despite their short-term volatility. On the other hand, we have Jerry, who dollar cost average and invest the same $12,000 through a $2,000 monthly regular investment from January to June 2020. In February and March 2020, Jerry's $2,000 monthly investments were carried out when stock markets were trading at a huge discount during the COVID sell-off. By May 2021, Jerry's portfolio would have appreciated by over $5,000, which is $1,000 over dollars more than Tom. In this illustration, Jerry, who had dollar cost average, achieved higher investment returns than Tom, who invests all $12,000 lump sum in January 2020, even though they have the same $12,000 of investment capital. However, dollar cost averaging is not always better. If the starting point is in March 2020, Tom, who invests all $12,000 lump sum when global stock markets were trading at a huge discount in March, would obviously achieve higher returns than Jerry. By now, you would be wondering, if investing lump sum as early as possible and dollar cost averaging both have their pros and cons, what then should I do? Here's how you can have the best of both worlds and correctly apply dollar cost averaging. Firstly, make it a point to set aside a part of your monthly employment income and invest them through regular investment top-ups, i.e. dollar cost averaging. If your initial investment capital is less than 1 year worth of your regular investment top-ups, I strongly recommend that you invest all your initial investment capital lump sum right at the start. If your initial capital is more than 1 year worth of your regular investment top-ups, I strongly recommend that you consider dollar cost averaging the investment capital weekly over a 12 weeks period. This investment tip makes a balanced and rational trade-off between the probability of markets appreciating after you start your initial investment vis-a-vis the risk of markets experiencing a market correction immediately after you start your initial investment. Using this investment tip, even if you experience an unfortunate market correction immediately after you start your initial investment, The temporary drawdown should be tolerable in relative size. Besides, you would also capitalize on any market corrections through your regular investment top-ups carried out at the market discount. This investment tip also have two great benefits. Firstly, it helps you to save a sum of money every month for your precious financial goals, be it your dream house or your lovely children's education. Secondly, more funds set aside and invested means larger investment returns. At Order Wealth, we make it hassle-free to automate your investment journey the intelligent way. All you need to do is to start an investment account online at www.orderwealth.sg. Truly a simpler, better life. If you have any questions, feel free to drop us a call. If you have enjoyed and found the video useful, please like and share the video to whom you think will find it useful. If you'd like me to cover a particular topic, drop us a note in the comment section below. Till then,